Hey, investors! Krishnan here, and listen up because we're diving headfirst into the wild world of the Indian stock market. Forget the fluff, forget the noise. We're going straight to the heart of the matter with the top 5 reasons behind this downturn. So buckle up because we're about to break it down Kramer style. First up, we got to talk about the elephants in the room, the foreign portfolio investors, or FPIs. These guys have been pulling out of the Indian market faster than you can say correction. And let me tell you, that kind of selling spree sends shockwaves through the entire system. Why are they fleeing? Well, a big part of it is the global landscape right now. Without them, it's an uphill battle. Speaking of the global landscape, let's talk about the elephant in the overall economic outlook. We've got trade tensions simmering between the big dogs, which always throws a wrench in the gears of global commerce. Now, when the world catches a cold, emerging markets like India tend to feel it worse. It's a classic case of risk-off sentiment, and it's hitting India hard. Okay, so we've covered the global gloom and doom, but let's not forget about what's happening on the home front. Growth has been slowing, and while it's still respectable compared to the rest of the world, those high expectations are starting to fade. Investors love a good growth story, but they're also quick to sniff out any signs of weakness. Is the government doing enough to address structural issues? These are the questions keeping investors up at night. Now, let's talk about the companies themselves. We've seen some high-profile earnings disappointments, particularly in sectors that were once considered darlings of the market. When the growth story is intact, investors are often willing to pay a premium for a piece of the action. But when that growth starts to sputter, suddenly those valuations start looking awfully rich. Last but not least, we have to talk about the big kahuna, the US dollar. When US bond yields rise and the dollar strengthens, it creates a powerful magnet that pulls capital away from riskier assets in emerging markets and back towards the perceived safety of US shores. And right now, that flow is not in India's favor. As long as the US economy continues to outperform and the dollar remains strong, it will be an uphill battle for the Indian market to regain its footing. So there you have it, the 5 horsemen of the Indian market apocalypse. Okay, maybe that's a bit dramatic, but you get the picture. The road ahead is uncertain. And frankly, anyone who tells you they know exactly what's going to happen is selling something. Do your homework, stay informed, and as always, don't bet the farm. Thanks for tuning in. Don't forget to smash that like button, ring the notification bell, and subscribe to Krishnan's channel for more market-moving insights. See you in the next video.